Okay, you got your ears on there, Dino. Just want to make sure that you can hear me okay, and then we'll. I just want to kick this off, give you a bit of an idea. There's a few things I want to run through, which would be beneficial for everyone for that matter. But let me just make sure. Starting in 1 second. Sorry, I messed up the link. All right, should be ready to go very shortly. All right, sorry guys about that. Okay, now, so you guys can hear me okay? Just what we do there. G'day, okay, you've got me there. All right, so basically what I want to do is just run you through the ins and outs of, well, it's actually just trading in general, but also, Dean, you were asking about the next best trade, the sterling trade from last week. Now, it's a very good question as to why we put the order on, what about the timing of the order. Okay, now let me just bring that across and I'll get it up. So you just look at the side, go down to the next best trades. I'll show you what we're actually going to be focusing on. Now, this is a normal part of trading. If you don't get into this routine, then you're going to miss a lot of opportunities. Go back to page 2 here. This is just before all those non-farm payroll orders, which was a bit unfortunate. They came out strong, but you can't help this. So basically looking at this trade here, all right, we're buying sterling 1st of Feb, and it was through, I think it was above the 142 level. So just looking at the level itself, okay, we're looking at the trend line here. So I saw this probably and put the order on, I'd say 5 or 6 hours before it actually happened. Now, the main part of the order, well there's 2 parts to it, right? First part is a technical setup, which I'll go through in a minute. And the second part is the actual potential driver, the fundamental driver for this order to be driven through that technical level is going to come from the manufacturing PMI data. All right, so let me just sort of show you what you need to do. And this is, I've done the exact same thing today, actually, funnily enough, on sterling and sterling yen. So now I can't go back in time. So let me just draw this trend line. Now, sterling has been actually going quite mad of late, okay? And what I mean is it's been sort of shooting along all over the place. So we sort of move here, from 138 or around 139 up to 144, I think it was. It's retraced back down lower. We had a nice sort of resistance line. And the feeling was, and I think we've had this before, Dean, is, the easy trade is like a no-brainer trade. Pretty sure. Let me just double check my the chart here. Make sure I'm on the right levels. I think that's correct. Actually, no. Hang on. This is where we are over here. Sorry, mate. This is it here. So basically, we had a situation. So I know it's hard to not think about the levels on the top side here, but so we've had a top here, another fresh top in sterling. Now the currency is trading sideways. Okay, now this isn't like massive because you've got sort of the starting point up here around 143.44. We've got the next high here, 142.32. Now this is the start of a good trend line. It doesn't really confirm it. Then we've got to see all this close price action. It's actually looked to me, it was either building up for a move, a quick move higher, or it sort of drifts back into the range down here. Now, looking at the opportunities as it was, the Bank of England, funnily enough, and this is the move that we saw from the weekend, this move up through this level here, was on the back of the Bank of England, Carney coming out and saying, look, we've got to tackle inflation, right? That's a hawkish comment, which would actually have an overriding topside bias. And I was a little bit pissed off with myself that I actually didn't get onto that probably first thing on the Monday, Tuesday, because it was just hearing the central bank say that, and the currency hadn't really moved. I'm like, well, that's actually quite odd. There's a chance to get into the trade. I mean, it was in the middle of nowhere, but still, you've got to be thinking topside. The Bank of England is thinking aggressive as far as inflation. That means potential interest rate hikes. And that was the basic foundation of it. So I had this trend line here. We've got the one touch, two touches, and it's sitting here around 141.60 during, I think it was sort of during the Asian day, actually, or the Asian session. Now, I'm looking at the currencies and thinking, well, where's the best trade here? Now, if I just bring that back over here, so we were looking at, the fundamentals, right, as we go from session to session, do provide really good trading opportunities. And what we mean by that is they create momentum. They create shifts in momentum. They will give currencies a push when otherwise they would just trade sideways. Now, generally, when they do trade sideways, that's primarily because there's no fundamental releases to drive it higher or drive it lower. So the direction comes from that. Now, one of the key things is, now this is a technical setup. We've got a general Bank of England sentiment bias to the top side. Now, I think you were right. You're like, well, why did we put the order on? So it's sitting around here in the 70s, 60s, 70s, 80s. I've put the order on to be triggered just above this level. In actual fact, I think I got triggered a little bit lower. Primarily, I think I may have had I had my order on MC4, but I think it was triggered at 14. So I probably didn't fix up the discrepancy in the charts at that stage. But the situation is, we've got a trend line, we've got resistance, we've got an overriding bias. My bias is topside. I'm thinking if the UK manufacturing data is strong, well, then it shoots up through this trend line. Now, what actually happened was, if I can just blow this up a bit, we had a situation where sterling actually took off, right? It was sort of sitting back, it sort of just dipped a bit during probably the end of the Asian day, back down to 40. I still wasn't sort of worried about it because I knew that if the manufacturing numbers come out strong, there's already an upward bias. With this trend line here provides the entry level. So I just need to put the order on. As soon as I recognize I've got clear direction and I've got an entry level, that's the signal to put the order in the market. Now, this was actually a little bit weird because what we found is, and a lot of the UK data, I'd say over the last year and a half, they are the worst at keeping a secret as far as the data goes. And the data is being leaked, every other day. It's actually, there's a massive issue for the authorities over there. I don't know how they're going to stop it because someone is getting the numbers early. And this is a definite case of it. So sterling had rallied from sort of 141.60 over the course of 2 hours up to 142.60, 100 points. Now, I had that order in there because it was a technical trade going with the sentiment of the central bank. And the one key thing I wanted was the manufacturing numbers to kick it up. Well, funnily enough, I'd already taken profit up here in the 60s. I think it was around 67 on this last run to the top up here, actually before the manufacturing numbers came out. Right. So one of the key things is the first thing you need to do to put a trade on, right? You need a general bias in the currency. Now, you can't see that clearly just from this chart, but I can tell you the move up here was all on the back of the Bank of England, right? They were talking aggressive about tackling inflation. So it's got that bias. At this point here, right, it's above here. We haven't got anything to go by. But by the time we got to the first, we had that top and it sort of pulled back. Now, that was enough for me to go, okay, now we've got a trend line. Now I've got a level to get in. And this is what the bankers will do. They will look for a specific entry. So you need it to top out somewhere and then for it to pull back. Then you draw your trend line. This is where the potential is. The fundamental drive of the manufacturing numbers is like an afterthought that if it happens, it will just happen. So you can put the order on straight away. Funnily enough, it was probably lucky I did, because if I hadn't, then I would have been sort of sitting here. It's 50 points through that level here on the top side, and the manufacturing numbers haven't even come out. It looked like the driver was the manufacturing numbers, but they were leaked, and someone actually bought the crap out of it before it got up there. All right, so that's one of the key things there that you need to understand. Now, when you see opportunities, and let me just run you through what I'm seeing here at the moment on sterling. When you see an opportunity, you need to, as soon as you see a technical setup and you have direction of the currency, put the orders in the market. If you don't put the orders in the market, you will make less money than if you don't. And primarily because you'll get into a lot more positions. You may end up taking a lot of 20 or 30 pointers because you get into trades, it stalls, you're taking the cash, you keep building your account. If you don't put orders in the market, you're relying on yourself to trigger these orders in live market situations, and that's not ideal. That's when the emotional side of things will take over. Now, let me just show you what I've got here as far as sterling goes today. Now, let me just give you a look at the next best trade list. Now, one of the key things that I look at, and I've actually restructured the way I do the updating and my analysis in the mornings, primarily just to fit in with what I want to do. And that's look at the market a bit closer. So now I've got sterling and sterling yen. Okay, they're the two trades or currency pairs that I see as being the next best potential trading opportunities. Now, where does that come from? Now, okay, if you come back over here to the economic numbers, right, this is the daily. This is where momentum will come for all currency pairs as far as economic numbers go. So if you just come down here, we've got some Japanese numbers which are very low impacting numbers. We've got some German industrial output numbers. Now that could impact. What we have noticed over the last week, the Eurozone numbers haven't been sort of working in with the currency at all, so I'm not going to really worry about that too much. Halifax house prices. Now, I lived in the UK for 4 years when I worked at Citibank. Halifax is one of the biggest lenders over there. Okay, so their numbers are pretty solid. Now, what do we know about the market so far, right at the moment? And I sort of just went through it. Okay, Bank of England, right? They have like a hawkish sentiment at the moment towards inflation. We've got the Bank of England meeting, right, on Thursday. Now, this is going to be a honker. We may actually see these guys changing their vote counts. One thing is if they go from being neutral to hawkish, then that's a further confirmation that the Bank of England are potentially going towards raising rates, and that's what they need to do. So, and that'll be factored into the market. So you're looking at the economic numbers here. You've got housing numbers. Okay, so if the housing numbers are really strong as well, that's going to add more weight to inflation. That's going to actually give the central bank even more to think about. And to me, that's even more upward bias. Now, another good thing to think of here at the moment is, and this is why we keep an eye on the markets day to day, is this last big move down here in sterling, right, was on the back of, the equity markets crapping out 4 to 4.5% the previous day. Now, there's been a lot of discussion about why that happened, and I know a lot of algo systems have been blamed for that on the S&P minis and all these sorts of things. So now the equity market today has sort of turned around. The Dow Jones is up 2.3%. The Nikkei's bounced back 3.6%. So they're actually bouncing, and this is actually, the answers around why the market collapsed, whether it was an algo-driven event or not, that could actually be, substantial. And what that will mean is there would have been a lot of positions put on as sterling sort of dropped here. They will need to be squared up, especially if it goes back above these levels here. And one of the good things is here, the structure of this order, right? If I just come back over here, this is where it sort of topped out after it sort of broke down. It's right on 140 the figure, massive big round number, or big round number as you call them down. So you've got that big round number. We've got a short-term 1, 2 coming up to the third touch resistance line here. This is not too indifferent to the manufacturing trade I put on last week. So I'm thinking, well, if it breaks through 140 the figure, or that trend line is a little bit lower now, we should see sterling take off, right? Bank of England tomorrow. We've got, the correcting situation of the currency move, of the US dollar move, after the equities have stabilised. We've got a big round number. We've got a resistance line. And now also we've got this kicker here, the Halifax house prices. Now, if that's strong, then this thing goes up. So the foundations for this trade are technical. So you can actually put the order on either way. You can actually be looking to sell here or buy. Now, I'm looking to buy primarily because of the Bank of England bias, underlying bias of getting aggressive with inflation. Right, so that's my bias. It's top side. I'm always favouring the central bank. They always win. Now, this house price number, if it's weak, well then hopefully, sterling should just drift lower again. Right, so our order is no problem. So I can come back in a number of hours here. So this number is out in 5 hours? 5 hours 8 minutes. I can come back and check that. Oh, sorry, 7 hours and 12, what am I doing here? 7 hours. Sorry, 7 hours, 8 minutes. So I can come back and check that later in the day. I know if it goes through that level, though, there will be stop loss orders triggered, which will take it higher anyway. If the economic release has not come out, well, then I can assess the situation before the number or even afterwards. So basically the situation is when you see opportunities, you need to act and put these trades on. So out of those economic numbers, right, I've targeted the Halifax house prices, the UK house prices, as being a high impacting event that could cause sterling to go higher. All the numbers out of the UK have been stronger. Regardless of what Carney said previously, they weren't raising rates for some time, but all the numbers are cooking. So they are definitely going to be pushed to raise rates again outside their general opinion. Now, one of the other things is if you're looking at sterling, you want to be looking very closely at sterling yen. So, or actually the sterling crosses for that matter. Now, I actually did this. I went through a number of different things, had a look at all the sterling crosses, and to me, sterling yen was the best setup. Now, you can't see it here on this chart here because I haven't actually drawn the trend lines there, but if I come back to my sterling template, this is another thing of that you can have, Dean, with Reuters. Zenith is a whole heap of templates specific for currency pairs. It saves you going fishing looking for all sorts of things. Now, what I'm looking at is, that's the wrong one. There's two trend lines here, but I'm looking for the one that's most relevant to the market. So there's one at the top here, and there's another one that comes from this point here, 156.41, down to this high here, 155.38, and now it's coming back into the market. So what we've got here is we've got the cloud and the trend line, or the trend line right in the middle of the cloud. And this is a really, really strong setup. And actually both sides of the market. See how it sort of got close to the cloud and sort of backed off a bit? You would expect that to happen. But once again, if the Halifax numbers come out during that UK session, the Japanese traders will still be there, right? So that'll be the end of the Tokyo session. If it blasts through sterling, through 140 the figure, it's probably going to coalesce with a break of 153.60 or thereabouts, or it should get more aggressive as it breaks into the cloud, breaks through the trend line, and then we've got a trade to the top side there in sterling yen as well. Now, I've put both of these orders on, as I said, 7 hours before the release. And what that covers you is potential events leading into it. Okay, so if there's something happens in the UK and it's positive, well, we've got the technical level. That's the key thing, right? That gives us the entry. If you didn't have that, then I wouldn't be able to put any orders on. But because I've got a trend line on sterling and also on sterling yen, this enables us to get aggressive with the currencies and actually get the orders in the market. That way, you don't miss it. So the idea is, and what it will do is, it'll save you spending, several hours in front of the screens waiting for your trend lines to break. Now, I just know, with a lot of experience, if the trend line does break, it should go for a run of 20 to 30 to 40 points. Now, with that, I've got trend line trader set up to trigger that order against the trend line. So if it breaks, it's in the right spot. And also, if it goes through 20 points, my order will be automatically moved to break even. So there's no need for me to sit in front of the screens at all. What I will do is I'll come back and check the where it is probably 10 minutes before that Halifax number comes out. And if it hasn't been triggered, well, then I can actually execute the order manually. But say I get busy, for instance, I don't have to worry about it anyway, because if it comes out strong, it should go through the levels and we've got the trade on anyway. All right. Does that make a bit of sense? So the idea is basically you're always looking through your charts, right? And Aussie's sort of just drifting sideways there, but you're looking for good technical levels. Now, what have we got in the Aussie? Well, the Aussie's sort of in a bit of a downtrend. It has poked up above the short-term resistance line, but there's nothing really to get me involved in. Like, there's no directional data here. So, and the one key thing for the Aussie was the Kiwi shot up to 45 on those strong employment numbers. Now, that's one thing that sort of probably put a little bit of an upward bias on the Aussie at the time. So, you know what? I let that go. There are better opportunities. And as I said, we are coming out of a situation where the equity market was a major focus yesterday. So we're looking at the markets very closely and keeping a close eye on, say, the Nikkei with dollar yen. And if everything settles down, well, the currency should go back to where they were previously, and that's actually trending. And if I come back to sterling, I mean, overriding here on the weeklies, okay, it is going up. It's a massive pullback. I think this is one of those big clean outs to the downside where we could see some of these currency pairs really explode to the top side, even more so than I thought before the non-farm payrolls. Okay, this is it's just like a big correction, retracement. It's like a refueling station, and then the currencies explode. So that sort of goes with my view of the US dollar as well. So coming back to sterling, and that's how you sort of play it. So hopefully that makes a bit of sense to you. Now, okay, so you got a question there. I still have no clue about processing the fundamental information. There's not too much. Don't overcomplicate it, right? So this is one of the key features of what we're trying to do with the rest of the site. And I haven't actually updated it yet. But if you're coming back into the market insight and these sorts of things, all the central bank sentiment, all these which we're tuning up as well. The idea is the central bank has a general sentiment. They are either looking at potentially raising rates, cutting rates, or doing nothing. At the moment, a lot of central banks have been doing nothing. Now, if they look towards potentially raising rates, well, that's like raising rates. So that gives it a positive bias. That's what's happened on sterling. So when you come back through this, don't overthink it. When you come to the economic numbers, you can go through the Pro Trader course. Again, just have a look. This is actual versus forecast. Is the number here that comes out, is it stronger than 0.2 or weaker? If it's stronger, generally goes up. If it's weaker, it goes down. Now, there's certain levels of that. There's a low variance, high variance, or medium variance, right? So say this number comes out plus 1%, right? Well, that's extremely high variance on the top side. The currency will explode to the top side, right? So that's all you have to think about. Start with that and then build the central bank sentiment on top of it. The more we cover things, the more you'll understand it, right? But don't. So these fundamental numbers, they just give the currency's direction, because all these numbers here, right? This is what each central bank looks at, and that's where they make their decision on interest rates. These are all the small components that they discuss at their monthly meetings, right? They go through, how's housing this month? Yeah, that was higher. How was inflation? Well, that was higher. How was the manufacturing? Well, that was higher. How was wages? Well, that was higher. It's like, well, okay, guys, we better raise rates, That's why we look at the numbers. If they're stronger, it goes up because the market is factoring in that small percentage change of a potential change in interest rates from the central bank at the next meeting. Okay, and that's why we look at all these numbers. Like the Kiwi, why do you think the Kiwi shot up? Really strong numbers, right? It's about economic growth, potential inflation. So the currency goes up because that is a sign that the central bank could raise rates. It's like a key component, and that's what the market sort of moves on as soon as these numbers come out. This is the lifeline, the heartbeat, the pulse of the markets. And if you aren't aware of these and how they work and where they come into play, you're going to get left behind, right? And you're not going to know what you're doing. So the idea is, if you join the dots, you've got your technical set up. Now, your main question is, does it go up or down? Well, I'm not sure at this point, but I can tell you what, if those housing numbers are strong, it goes with the general Bank of England sentiment, and the thing should go up, right? At the same time, I can actually come back to this at the time of the release. If those numbers are weak, will I sell? Well, maybe not, because I'm actually thinking, I keep thinking we've got the Bank of England meeting tomorrow. They've already said they're going to tackle inflation, which to me means potentially raise rates or be extremely hawkish about it, which gives the currency an underlying upward bias. Now, we saw the sterling drift lower here on the back of strong US employment numbers last week, and then we had the big sort of clean out on the equity markets getting smashed. Right, now, equity markets have turned around. There's been no extra fresh US numbers. We're in a position here where we can see this thing explode, and that's where the housing number is the catalyst. Yeah, and so just coming back to your, you just went through all this stuff about the Bank of England and the thinking, so don't worry over my head. Yeah, okay, don't worry about the Bank of England, right? So what the Bank of England is trying to do, they are trying to manage the economic fundamentals, which are these numbers. If they are all strong, their job is to supply cash in the economy as well as manage monetary policy, right? So they've got an underlying job to keep inflation. If we come up over here, inflation target 2%. Now, actual inflation for these guys, it's actually running at 3%, right? So their target's 2%. They're going to have to actually change that inflation target because the UK economy is overheating. Now, what they have to do to stop inflation is raise rates. That'll slow people down, right? So, but go through the central bank stuff on the course. Just try and understand how it works, right? Their job is to keep inflation in a very tight range. If inflation heats up, I mean, they'll raise rates. If it slows down, they cut rates. Higher rates, higher currency. Lower rates, lower currency. That's what you sort of have to think about. Now, don't try and digest that all in one day, because that will really sort of mess with you. Just concentrate on what the economic numbers are, right? Once you understand the numbers, then you'll understand what the central bank is looking at, okay? And that's it. So you're connecting the dots from each month from these economic numbers to the next central bank meeting. So we've got these Kiwi employment numbers. Funnily enough, we've got the Kiwi central bank meeting tomorrow, right? And this is where they will go through. They'll reconcile all of last month's New Zealand economic numbers, and they will work out whether they're raising rates, cutting rates. If they're not doing that, what their future intentions are. Okay, and they've been pretty steady for some time. So yeah, and that's pretty much what your job is basically to monitor the fundamentals, because that's where the momentum will shift. Isolate the best technical levels, right? We use the fundamentals. Think of it this way, Dino. So we've got the technical levels here, which give us entry levels. Now we've got the fundamental aspect, which is going to give us direction, right? So those economic numbers give us direction. The central banks are the key guys at the very end of the day will say it's going up or going down, right? And that's pretty much when we say that, we mean interest rates. They're going up or going down, and that means the currency as well. All right. How does that sit with you? Hopefully, what the main part of this was actually just explaining to you why we put the orders on straight away, right? It's basically not to miss the opportunity, and that's it. So once you see a good opportunity and you're pretty confident with direction, put the orders on, okay? Regardless if it's an hour, 2 hours, 5 hours, 6 hours away. All right, nice one, Michael. So. All right, so that's good. Now, understanding that should really set up your day. Now, if you do get Reuters Zenathon, you can actually go through here and you'll go through the majors. As I was just saying, just to finish off, I'm looking at the Aussie here. I've got a nice 1, 2, 3, sort of fourth trend touch here on the trend line. I think it's slightly down, but this is put me off. It's trading sideways through the trend line now. Now, this could potentially go up to 79.50. I'm looking for direction. Is the Aussie going up or going down? Now, retail sales yesterday was weak, but what we've got here, don't forget, at the back of the end of everything, with the US dollar as well, it's the last move, big move down, was on the back of the equity markets. They have stabilized at the moment. So that means a correction higher. So I'm thinking, if anything, this thing could slowly squeeze higher. Because there's no levels, it can just slowly climb. It's one of these slow creepers that you think you're safe, but all of a sudden it's 10 points higher, then 2 hours later it's another 10, and you keep raising your stop and you just get hammered. Kiwi is within ranges, so, and we've already had the data out there. Central bank is tomorrow, so I'll wait for that. Dollar yen has potential. I've overlaid the Nikkei there on top of the chart here just to sort of keep an eye on it. You can see how the cloud is really behaving here. The market is respecting that a lot. So if we do see a break through the cloud there, 109.50, we might see a little spike up towards 75. But it's not a hugely amazing setup like sterling yen. Euro, well, there's nothing coming out of Europe. We've got those industrial output numbers. Once again, the pressure from that has been on US data and that equity move. We could see that correct. If the equity markets bounce again tomorrow by 2%, we'll see that higher. Sterling, Bank of England tomorrow. We've got the one key fundamental release here. So my bias is for some of these currencies to correct as that equity move is discounted, right? So, and the best trade for me out of all of these is sterling, because we've got the housing numbers. We've also got the trend line here, and also on the cross, sterling yen, it's going to chime in as well. So right there as well. So I'm thinking sterling yen are the best trades for me, and I put those orders on. Now I can actually, go about my day, go fishing, get some other things done. You don't need to spend time in front of the screens once you've identified the opportunity. Now, if the markets are busy like they were yesterday, well then, yeah, by all means, sit in front of the screens and start banging away. But, that's not every day of the week. So you want to make sure you've got these setups in place, and then you can go about your day. All right, mate, any other questions there on that one? Hopefully I've covered it all. Yep. All right. Well, that's a bit of a wrap on that one. We'll put this up on the side as well, so you can actually have another look at it as well to run through the various parts. Dino, you brought up a pretty good point there. I might start to do a few more how the central banks function and where they sort of sit in the market as far as direction and managing the currencies and the economies. It's probably a good one to go by. All right, chaps, thanks for joining us. Sorry I was a little bit late. Hopefully that was helpful, and we'll see you in the trade zone. Cheerio.